Non-resident Indians often wonder if TDS applies to them or what TDS rates are for them. In today's video, I will introduce you to the different TDS rates applicable for NRIs. But first, let's understand what TDS is. TDS or tax deducted at source is the income tax that is deducted before the income is given to you. Say when a bank deducts the tax on interest earnings before depositing the remaining amount of interest into your bank account. You need to file an income tax return to reclaim any excess TDS amount if more tax has been deducted than you actually owe. But when is TDS due? TDS is due when you receive income such as interest, dividends or rent, or when you realize any capital gains from shares, mutual funds, real estate and other assets. If TDS is not deducted as required, penalties may be imposed. When does TDS apply for NRIs? For NRIs, TDS applies to all sources of income in India except for interest earned on non-resident external or NRE fixed deposits and FCNR deposit. Section 195 of the Income Tax Act deals with TDS for NRIs. This section ensures that TDS is deducted from these income sources before the payment is made to the NRI. It applies to NRIs who earn income from various sources in India, which includes interest from bank deposits, bonds, or stock dividends, short-term capital gains, long-term capital gains from shares, and even bonds, long-term capital gains from real estate as well, and other long-term capital gains. There are no minimum thresholds for TDS limits for NRIs, unlike, say, on real estate. Let's quickly take a look at the different TDS rates for NRIs. If your income source is shares, then the TDS rate is 10%. If the income source is bonds, then also the TDS is 10%. For company FD, equity-oriented mutual funds and business trusts like RITE or InvIT, it's also 10%. However, short-term capital gains is 15%. Debt-oriented mutual funds and any other long-term capital gains are 20%. For coupons from bonds, NRO interest and NRO FD maturity, the TDS is 30%. If your sources of income are dividends from stocks or RITEs and dividends from mutual funds, then your TDS will be 20%. But for property sale, it can be over 20%. For rent and other income, your TDS is 30%. A cess of 4% applies to all TDS rates. If the TDS is 10%, then with cess it becomes 10.4%, and with 10% surcharge plus 4% cess, it is 11.95%. Do note that a 10% surcharge applies only if your taxable income exceeds 50 lakh rupees, effectively adding an extra tax on the extra you owe. The surcharge rate increases further for incomes above 1 crore rupees. Now going back to the TDS rates with cess. For 15% it's 15.6% and for 20% it's 20.8%. If TDS is 30%, then after adding cess it becomes 31.2%. Now a common question that may cross your mind. Can any TDS be lowered? Yes, it can be. This can be done by applying for a lower deduction certificate using Form 13. Form 13 under Section 197 is used to request a reduction or exemption from TDS. If approved, the buyer will deduct a lower amount of TDS when making payments to you. How can NRIs get a TDS refund? You have two ways to recover excess TDS, both of which require filing an income tax return in India by 31st July. TDS details can be found in Form 26 AS. Here's what filing the ITR means. If TDS is more than the actual tax due, you will receive a refund of the excess amount. If TDS is less than the actual tax due, you will need to pay the difference. But you may also receive a refund if you've overpaid in some areas. Additionally, you may need to pay tax in your home country as well. However, the Double Taxation Avoidance Agreement, or as we call it, the DTAA, with that you can claim a tax credit for taxes paid here in India. Tax deducted at source is a key part of India's tax system, ensuring the government gets its share from different transactions. For NRIs, a TDS certificate is an important document that provides proof of the tax which has been deducted and submitted to the government. Let's find out why you need a TDS certificate. Number 1, proof of tax payment. The TDS certificate confirms that tax has been deducted and paid to the authorities. Now, without this certificate, NRIs might struggle to demonstrate their tax compliance. Number 2, claiming tax refunds. If an NRI finds that the tax deducted is more than their actual tax liability, they can use the TDS certificate to request a refund from the income tax department. Number 3, filing income tax returns. When filing ITR in India, the TDS certificate serves as a proof of taxes already paid. Then you have avoiding double taxation. You can use the TDS certificate to claim relief under DTAA with your resident country as an NRI, preventing double taxation on the same income. How to get a TDS exemption certificate online? Now you can apply for a TDS exemption online. We will be coming up with a detailed video on the same soon, so watch this space. Let's quickly go through the important points we discussed in this video. TDS, or tax deducted at source, is the income that is deducted before the income is given to you. For NRIs, TDS applies to all sources of income here in India except for interest earned on non-resident external or NRE fixed deposits. There are no minimum thresholds for TDS limits for NRIs, unlike, say, real estate. There are different TDS rates applicable to NRIs for different sources of income. A cess of 4% applies to all TDS rates. You can get your TDS rate reduced by applying for a lower deduction certificate using Form 13 under Section 90. NRIs have two ways to recover excess TDS, both of which require filing an income tax return in India by 31st July. The TDS certificate confirms that tax has been deducted and paid to the authorities. Now, without this certificate, NRIs might struggle to demonstrate their tax compliance. That's all for today. Hope you all have the information related to TDS applicable to non-resident Indians. But if you have any more questions, feel free to drop them in the comments section. And before you go, please remember that this video is for educational purposes only. Any information that we've mentioned in the video is not an endorsement or investment advice. But if you found this video helpful, do not forget to hit the like button and subscribe to Groww NRI.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and/or other instruments traded on the stock exchanges.